Alright, for the past few days I have been trying to revamp my trading, and you all know I kind of lost direction. And now we're back to stage one, back to the very beginning, back to learning again. And something I have come to understand in the past 1 week is being a learner, a beginner, is actually very painful and stressful. That is a fact. No brainer, no printer, and no stress. It's a fact. Because tell me why I'm having difficulty to choose a trading strategy. Like, why am I finding it difficult to choose a trading strategy to stick with?
So if you're out there and you want to see what forex trading really looks like, this is the channel for you. Like, trust me, this is the channel for you. This channel is the raw documentation of actual progress and regressions that a person who is into forex seriously and also has a 9 to 5 job is like. This is literally the whole shebang.
I started this trading vlog to tell you guys about the progress in trading for myself, and obviously in 6 months, 6.5 months, I have lost direction in trading. And like I said in my last video, I'll put the link up here, it was mostly due to distractions from both work and other things, but I won't call it distractions, I'll just call it excuses. So recently I had told myself, you know what, let us actually really streamline what we're doing here and be very certain about it, only for me to discover that I don't even have confidence in what I am doing yet, which is a problem. But I decided to do serious research. Now, a lot of people are going to hear this part of what I'm going to say and they are going to be like shocked and stoked and surprised, and they're going to be like, is that correct? So remove all biases you have in your head and think about it like this. I did a deep dive analysis, a serious deep research using Gemini, and what I found out today was something, should I call it unexpected to an extent. It was slightly expected, but it was more like unexpected. So I'm just going to give you a heads view. I don't want to bore your time. I spent 4 hours getting this entire research into my head, like reading it. And I also used the read aloud feature to read it. And in that whole 4 hours of reading this stuff, right, I was able to pick out some certain things. You can see the highlighted part says, while no single holy grail strategy exists, the analysis indicates that techniques emphasizing confluence, robust risk management, and rigorous backtesting consistently demonstrate higher potential. What does it mean? First and foremost, before we talk about what it means, let's talk about what I asked AI to really research on. This is the question here. I said, okay, there was a formal question, like a very old question I had with ChatGPT. Not really ChatGPT, this is Gemini. So there was a question I asked like way long ago. That was back as of March 15th. You can see it right here in my history. And the question went like this. I asked it, do a deep research over all available data you can get on trading strategy that has made the most people become profitable in trading, and also bring me a comparison of them, which the AI gave me this process steps, the research website, and how it's going to go about it, and then did the entire research. I don't want to bore you with that research. So what I'm going to do is, instead of us going through the entire research, let's just go through the key points, right? The key points are this. So for the strategies, right? For the strategies, these are the trading strategies. We have swing trading, which is stock, forex, and crypto related. The time horizon is between short to medium term. The risk level is moderate. The potential reward is moderate. The experience level, like suitable experience level, beginner to experienced, so it's good for everybody. Swing trading is good for everybody anyway, anybody can do it. The capital requirement is moderate. The psychological demand is also moderate, but it just requires patience and quick reaction. The typical win rate is between 35 to 85%, which is highly variable. You get that whole range for you to go through. And then the adaptability to market condition is effective in both trending and ranging markets. Now, it did the same thing for day trading, which includes scalping. And for day trading, it says the time horizon is very short. It also applies to stock, forex, and crypto. The typical risk is high. You can see this stuff right here, high risk trading, which is scalping and day trading. High. The potential reward is between low to moderate. So over here, I'm already seeing red flags. It's a high risk and potentially low reward. I don't think I should put myself in this. To even make it worse, it requires experienced trading, meaning you ought to actually have been good for you to be day trading in the first place. I mean, it means you ought to have been good with other strategies for you to come into day trading and be profitable. The requirement is moderate to capital requirement is moderate to high. The psychological demand is very high, fast-paced, stressful. The typical win rate, well, scalping is high, day trading moderate. So the win rate is actually high for scalping, but no good probability, nothing written there. Adaptability to market condition is best in volatile and liquid market. So day trading and scalping is perfect when there's chaos in the market. That's what it means. You're looking for chaos. But all I see here is red flags. Short term, high risk. It's low potential reward. Like low reward. That's enough is enough to tell me I'm not supposed to be looking here. The next thing is position trading. Position trading is good for stock, forex, and commodities. Now take note, they didn't say crypto. So for all those crypto brothers out there that think, or anybody if you're new, right, and you think crypto, you do position trading in crypto, don't even dare. Don't you dare. Don't try it. Even AI, after looking through how many websites, you can see this is how many? Jesus Christ, I can't even count. This is so many websites. Even looking through all these websites is telling you straight up to your face that where is it? It's telling you that position trading has nothing to do with crypto. The time horizon is long term. The risk is moderate to high also. Moderate to high. High and high. Potential reward is also high. The experience level is intermediate to experienced. So it means you can be less experienced in swing trading and still succeed. But in position, you need a higher level of experience, but not even as high as day trading. So all those guys that are telling you, I used to be a day trader, then I switched to this. I'm not saying anything. I didn't say anything. I did not say a single thing. I just, you get it. Capital requirement for position trading is very high. The psychological demand, it requires significant patience. Like, you gotta be baby Jesus to do this. But fine. Reported typical win rates last week. Not typically emphasized. Like, position traders are not talking about it out there. We don't even know if they are winning or losing. They are just not saying anything. But people believe that they are winning because they are like the bigger boys and all that, because they have high capital. People have high capital for them to run day trading too. Adaptability to market condition. Well, it's best in long-term trending markets. How do you know if a market will trend long-term? I don't even know how you can perform that miracle. But well, some people have the guts to, and they are doing it. The next strategy is dollar cost averaging. In fact, I'm tired of reading this whole thing. I think I'll put the PDF link somewhere down in the whole thing below, in the description below. Let's just do a quick infographic view of this whole stuff, right? So I'm going to ask AI to produce an infographics on this while we talk about what this whole thing is. So to my expectation, right, based on my calculation, I want to have short to medium term trading, and the only two things that really sits there is swing trading and breakout trading. We don't even know what strategy, what technical analysis technique to use. Yes, there is strategy and there's technical analysis technique, there's technical analysis strategy. This is like the foundation strategy, and this one actually has the breakout strategy, has the highest. Can be low with first breakout, but it has between 65 to 75% win rates. They even have momentum. So you can see these three things are the ones I really love, because especially with the fact that it has a reported win rate, like a typical reported win rate or range already existing. The rest of them do not have like reported win rate, they just have words. So these are the ones that comes to me like, they are reasonable, they're good, we should try, look at it. Okay, so this is the short, beautiful show of everything you need to know. So decoding profitable trading strategy, an infographic analysis of strategies that have historically enabled traders to achieve success based on in-depth market research. The trader's dilemma, it's so factual. Trader's dilemma. Which parts to profitability? There's time horizon, analysis type, and market focus, right? Market focus. And then strategies show down a comparative view. Wow, I nearly bit my tongue saying that. No single strategy is universally best. You heard that statement right there? There is nothing on the surface of the earth that's the best in terms of trading. They all work. Success depends on aligning the approach with the trader's capital, which I don't have, risk tolerance, and psychological temperaments. Now, I hate pressure. I react negatively with pressure. So I do not want like bad temperament kind of requirements from it. Risk tolerance, I like low to medium risk, not like heavy risk taker. Trading capital, I am low on every three. In fact, I am the low person in the three of them. And this is the sweet thing about it. So you can see right here, it says low capital. If you are low on risk to reward landscape, the lowest is dollar cost averaging, right? Dollar cost averaging has the low potential and low everything. But now this is where I can actually sit. And I've always been saying this on this channel. I want to be a swing trader. And you can see swing trader is just moderate, average of everything okay. And then immediately after it, we have breakout and trend following, which in fact, these are the two things I should even be looking out for. Then we have position, which is scary. Then we have momentum, which is just a tad bit more higher risk and still moderate reward. And then if you look at it on psychological demands, well, this is the thing. So patience and resilience, I have that one. I prefer that one a lot. So patience and resilience, the best thing there is trend following, having 3. In terms of stress tolerance, the best thing here is day trading, if you are good at tolerating stress. And then quick reaction is also day trading. So what I noticed is swing trading is just a fine overlap in everything. It's just the perfect round hole, like, the round hole in the round peg right there. Second time is appearing in a perfect spot. Time horizon and commitment. Well, day trading typically very short. Swing trading still short, but closer to the medium side. Trend following is medium, closer, just medium. Position trading is long, while dollar cost averaging very long. The experience level suitability. Now, experience level suitability, this is where the whole sweetness comes in. A lot of people come into this trading market and you're all beginners. So if you're a beginner, you should be looking at trend following, you should be looking at dollar cost averaging and breakout trading. And also swing trading. Yeah, swing trading too. However, if you're intermediate, most intermediate applies to all of them, right? All of them. But if you notice something, the one that requires high the most is, you can see it's day trading, position trading, trend following too, followed by momentum and news trading. In fact, why would you want to be a news trader? You have guts. Dive into prominent strategies. So I don't even want to do this long dive and all that stuff, but let's just listen to this short part. So, trend following. This strategy's philosophy is to ride the wave by trading in the direction of a sustained market trend. It's versatile across assets. It is versatile across assets, but requires discipline to endure periods of lower win rates, banking on large wins to offset smaller losses. The goal is to capitalize on long-term momentum. The tools are mostly moving averages, ADX, and price action. The challenges, it requires high psychological resilience during market chop, meaning when the market is choppy, sideways, ranging. Swing trading aims to capture swing in price over a few days to several weeks. It offers a balance between short-term and long-term trading, making it popular with part-time traders. So if you have a job, obviously you should just sit down and swing trading. But it requires solid technical analytics skills. That is the statement that has kept me up for the past how many days? The requirement of technical skills. It means I have to really learn a technique and learn it good. That's what it means. But that's not the end of the whole story. Profit from short to long-term medium price fluctuations. Okay. Supports and resistance, chart patterns, RSI and MACD, MACD, which are the tools. And the challenges, managing overnight risk and acting decisively on setups. This is scary. Dollar cost averaging. Everybody knows that one. I don't even need to talk about it. Well, the three pillars of trading success is risk management, emotional discipline, and continuous learning. So the whole story, the whole shebang in short form. But this was like, if you notice, this was March 25th. It was so long ago when I asked this question. So this morning, I came up with a different question. In fact, this question is where I decided to continue the whole story. I said swing trading, breakout trading, momentum trading. Highlighted, right? These are the three strategies I find most attractive and also applicable to myself. That's me, not you, me now. Now, I know of different trading technique, breakout and retest by Trader Nick, fair value gaps and fair value era, MMC by Joe Johnson, supply and demand by Bon Skorupinski, QMRO and QMC, the DAX brand, liquidity rates and run from ICT, trend lines from Tory Trades, but I also need a technique that already has data record of profitability. So I need you to look through the internet and give me a report of each technique I've listed here and how they perform under the different strategy approach. Now this is where AI decided to give me work. Like they literally decided to give me work. Let me show you what happened. AI did research and gave me, look at the story, just look at the story. Are you seeing it? It gave me stories. No, not bad stories now. not bad stories. Good stories. But my God, this is a lot. Like, really, look at it. It is a lot. It took me 4 hours to read this. 4 hours. Though I didn't even read it like I read it straight. I had to put it into Microsoft Word and then I had to play it out, like read aloud to hear it and be able to read faster. But it took 4 hours. This is 42 pages of information. That is a really deep research. In fact, thanks to Google anyway. I really, actually, I'm not saying it from a bad side. I kind of really like it. It is absolutely amazing what AI can do. AI did this in minutes. 42 pages of information. So as to make it easy, because I cannot read 42 pages in one video. So let's see the short form view of what the whole thing is all about. So it starts by saying a trader's guide to technical analysis. Like you said, swing trading, I need to know technical analysis. An infographic distilling the performance and application of popular trading techniques across swing, breakout, and momentum strategy. The core trading strategy: swing trading, breakout trading, momentum trading. Wow, trading suitability analysis. Each trading technique offers unique strengths. The radar charts below visualizes how suitable each method is for swing, breakouts, momentum trading based on the comprehensive reports. Now, breakout and retest. Perfect for swing, not good at all for momentum, just okay for, also good for breakout. So breakout and retest is best for swing trading and breakout strategy. So if you want to do swing and breakout strategy, then that's good. Fair value gap is good for momentum, not good for breakout, and good for swing. Supply and demand is good for, I forgot to read the stuffs at the top. So let's read the stuffs at the top. So breakout strategy: confirm breakouts by waiting for a price retest, offering higher probability entries. So swing and breakouts. It already confirms breakout. I mean, the name is breakout and retest. Fair value gaps, which is, most people know it as ICT's thing, but it has actually been existing long before ICT existed. So ICT just brought it to limelight because it was popular and he kind of renamed it to fair value gaps, but they are actually fair value gaps. Identifies market inefficiencies, anticipating retracements to fill the gap. So I will explain that. I like the in-depth explanation in this document. I think I will also upload that document in the link below. These are things that shows that what ICT is saying is true, just that the guy who is saying it doesn't actually know how, doesn't implement it properly enough in public. I don't know whether he does it properly in private, but in public he is known for being a clown, especially because he yaps too much. Supply and demand locates institutional order zones where price is likely to react or reverse. Not good for breakouts. Do not attempt to break out with this. Momentum and swing only. QMRO QMC by DAX asymmetric pattern identifying potential trend reversal, QMRO or continuation, QMC. It's not good for breakouts, perfect for momentum and swing. ICT liquidity raid. Advanced concept. Advanced. You see that word at the beginning? Advanced concepts. Focusing on smart money hunting stop loss clusters. Can be used for all of them, but not superb. So it's like the jack of all trading strategy. Same thing with trend line. A fundamental, to take note of this word, fundamental. A fundamental tool for visualizing trend direction and dynamic support/resistance. Works well for all of them. Not really like all too well. Ichimoku indicator. Now using the Ichimoku cloud, Tenkan-sen, and the rest. A comprehensive one glass indicator for trend, momentum, and support/resistance level. Still a good sit on all of them. Then remember that first book that a lot of us all read, the Trading Bible Candlestick. Most traders saw that book for the first time. I decided to put it up here, hammers on MAs. That is hammer pattern or pin bar on moving averages. A bullish reversal candle confirming a position relative to key moving averages. Can be used for swing, can be used for momentum, not breakouts. So the reality of trading profitability data. Anecdotal success, mixed data and backtest dependent. Breakouts and retests it is seriously requiring backtest. Fair value gap, same scenario. Supply and demand, well, it has mixed data. There have been people who have come out and said it's good. There are people who have come out and said it's bad, but it requires your backtest. QMRO QMC totally requires backtest. ICT liquidity raid. Somebody claims it's really, really good. That's what it means by anecdotal. The person claims it's really good and it requires a backtest too. Trend line requires your backtest. Ichimoku requires your backtest, and it has also produced mixed data. So people have said it produced high returns. Some people have said It's nonsense. And then hammers on MAs, same thing. A lot of people have said rubbish. Some people have said very, very great. Things like that. But the universal principle for success, again, master risk management, leverage confluence. Now, this is the part that really, really caught my attention. So, embrace backtesting and leverage confluence. I have a lot of people out there that say backtesting is crap. Even AI is telling you to go and backtest. This is serious. You're in trouble in the forest world. But the thing is this, it's not just backtest. You can forward test by opening a demo account and watching live markets and trying to demo trade the live market, which is what I'm doing actually, to learn a strategy. So the trader's recommended part is to select a technique that resonates with your style, conduct rigorous and honest backtesting, meaning you're going to put your heart to it. You're going to say, I'm going to do this honestly, truthfully, following the rules and nothing else, no partialities to it, and you're going to make it work. Build and master your risk management rules. So adjusting your RROs properly to fit what you have been seeing in the market, either in your backtesting or in your demo trading. Apply with confluence for high probability setup. Now, this is the tricky part. They said you should learn one strategy, and yes, they are telling you to have confluence. It means you should learn more than one strategy, but focus on one strategy. And when you see something where other strategies are saying the exact same thing, then you should see that as a high probability setup. Then also know what part of your strategy is high setup, because in every strategy there's high setup and there's low probability setup. So you need to know the two. And last but not least, continuously adapt, refine, and reevaluate your performance. Bro, it is a lot. I will not lie to you, it is a lot. In fact, this 46-page document, two things I always add. It says this underscores that trading success is less about discovering a secret holy grail and more about disciplined application, continuous learning, and adaptation. Even AI now is telling you it's not about finding the secret strategy. It has nothing to do with the secret strategy. It is simply adaptation and continuous learning and discipline. You learn something, you need to adapt to the market. You need to understand that, okay, maybe this one is not working. Let's see if we can change, which is what is happening to me right now. I think I'm adapting basically, because it's not as if MMC was not working, but I kind of diluted it so much that I had missed the point. And then coupled with the fact that I was testing some other strategies. So what I want to do now is we're going to focus on one strategy first, and then learn to confluence it with other things and understand what to confluence with, when to confluence it, and when not to. We're going to sit with that. So something else I wanted to show you guys was the second book. That is from the results, right? From the results, I had a table, which if I put it here, it's going to be difficult for you to read. But in this table, I got to look at breakout and retest, fair value gap, and the rest of them. And this is what you need to observe. So the core principle is that breakout and retest confirms genuine breakout by waiting for price to retest a broken support or resistance level. The swing trading probability and sustainability, well, so it's comparing it with swing trading, comparing it to breakouts, comparing it to momentum. Now, I don't need to even go too much into this because we've already seen it like in the other place where it works fine. So basically the complexity of this stuff of breakout trading is breakout and retest is medium. The nature of profitability data, well, they don't have profitable data, or rather backup, just claims. Though Trader Nick's claim is actually valid because he shows his book from time to time. So the things I want to focus on is the key pros and the key cons of each trading. So we could just hide all of this and focus on those 4 columns. So breakout and retest by Trader Nick. the key pro things is it has a higher probability of entries, a higher probability entry, meaning the entries are usually high probability, and it reduces false signal, and it has an improved risk to reward ratio. The cons is that it requires your patience, can miss strong moves that do not retest subjective support or resistance level, which to me I do not see a problem in these cons at all, to be honest. I rather miss strong runs and catch the ones that I catch and really catch them well. Fair value gap, fair value gap and fair value areas. So it's to identify market inefficiencies and see whether price is going to retrace into those imbalance and balance to move either up or down. Now it requires precise entries, which is a good thing. It identifies institutional footprints and works across every time frame. Superb. The bad thing is it has a flimsy theoretical foundation. So the theoretical foundation is shaky. It's shaky. Because the candle moves so much doesn't mean the institution actually did something there. Sometimes they will not come back. So you can see it's prone to fake signals. So not every fair value gap you see is valid, which even IO sees it a whole lot of times. There are reasons why a fair value gap should be valid or not, and gaps may not be filled or take long. So in my opinion, the last two statements here have been well tackled by IO, but for the theoretical foundation, that's quite tricky. So supply and demand by Bonsky is to locate institutional buying or selling pressure zone, areas of consolidation before large moves, where price is likely to reverse or continue. The key pro of this particular one is that it focuses on institutional flow. You know, we keep talking about institution. Sometimes I'm beginning to feel like it's tiring. It's boring. It has a strong logical foundation and a favorable risk to reward. So all of this makes this, in fact, I think I will give it numbers. So it means this is now the best performing thing here, while this is the second best performing and this is the third best performing in my view. This is my own personal view. So, but the risk, we didn't take a look at the risk. We'll take a look at the risk. The risk is what we bring it down from the plaque. So it requires deep understanding of market mechanics. Wow. Subjective zone identification and risk of old and invalid zone. So when it comes to all these things, I do not have like deep knowledge. So automatically this becomes my number 2, while fair value gap still remains number 3. QMR and QMC by DAX brand is a pattern-based strategy identifying trend reversals, which is QMR, Quasimodo reversal, or continuation, which is Quasimodo continuation, based on specific swing highs and low sequences. Yep. Early entry for reversal, which is a good thing. It has a high RR potential and distinct visual pattern. Like, in fact, the pattern is so specific that you cannot mix it. If you are missing it, then you've not understood pattern at all. The problem with this strategy is that it is susceptible to manipulation and liquidity grab. Manual trading difficulty, so it's quite difficult to really grasp that perfect picture. As much as it's a perfect picture, but it's quite difficult to grasp it, and then it is not foolproof. So currently this guy really sits at number 4 to me. Liquidity raids and runs. Identifies areas of concentrated stop losses or pending orders liquidity targeted by institutional algorithm, anticipating reversal after these sweeps. Equal lows and equal highs, and then price sweep, liquidity raid, just touches it, takes the liquidity out, and aligns with smart money flows, high risk to reward potential, and has a precise entry. That is nice. Good words. The problem, very complex. This is the first thing that is talking about complexity here. Very complex. Steep learning curve. Man, Jesus Christ, this is scary. Highly subjective interpretation. something that is complex still having subjective interpretation. Don't bother. It's number 6. I don't even want to know how many things do I have here. I think I have how many things? This is the last thing I want to learn. Something that is complex is still having subjective interpretation. No. So, trend line to retrace visualizes trend direction and dynamic supports and resistance by connecting price pivots, signals, entries or bounces or trade. Signals, entries / exit on bounces or trades. Simple to use, adaptable, clear visuals, support and resistance, and help trade with the trend. So it's a trend following thing. I mean, look at the name, is trend line. The problem is that it has subjective drawing, so it's subjective to anybody. It is less reliable in choppy markets. So all you have to do is look at the market. Is it choppy? Is it ranging? Run away. And it requires confirmation. So it requires confirmation. The rest of them didn't say require confirmation. Actually, a lot of them do require confirmation. So in this case, I think this is actually pretty simple. This is really easy. This is something that is supposed to be way more easier than just So I think this just won number 1 spot, just that it's subjective drawing. So I think I'll put it as number 2, meaning this is number 3, this is number 4, this is number 5. That guy is just going to stay at the bottom, don't bother. The Ichimoku indicator. The core principle is that it is comprehensive multi-component indicator providing trend, momentum, and dynamic support and resistance at a glance. So this is the thing about the Ichimoku indicator, right? It gives you everything at once. Like, this is the trend, this is the momentum, at the same time it's telling you, and this is also a good support or resistance level. So your job now is to do whatever miracles you need to do with Ichimoku, which people usually say when it's above. I don't want to say that whole story. Though the key pro thing is that it has a holistic market view. That means the whole market is seeing this view clearly. It has a dynamic support and resistance level, and it is forward-looking component. So apart from the fact that it is looking at indicators, calculate what has happened in price, right? Apart from the fact that it's looking at what has happened in price, it is also predicting at the same time. Unlike many other indicators that just tells you this is what price is doing as of now, this one is actually predicting, like, okay, if the cloud is all green and everything is all up, it's telling you there's a high tendency here for, looking forward to seeing more bullish move from this market. And then when it starts to change, it won't catch it in time, but when it does catch it, it will now tell you, okay, we're expecting low, bearish moves. The problem with this is it has a steep learning curve. It can lag and clutters your view. If you've ever opened Ichimoku on your trading view, broker, wherever it is, MT4, MT5, you would see so many things on your chart that sometimes you will miss what is what. It is less effective in a sideways market. So Ichimoku is absolutely useful in only trending markets. If the market is not trending, do not open Ichimoku. If the market is not about to start trending, do not open Ichimoku. And the last problem is, due to the sideways effect, it can also give false signals. So in this case, it is actually not difficult, though it has a steep learning curve, but it is not difficult. And steep learning curves, false signals, sideways. Let's just put it at number 7. So hammer candle on the 9 simple moving average and 21 moving average. Bullish reversal candle pattern, signaling buyer's re-entry after a downtrend, confirmed by short-term moving averages. Whew, that's a lot of story. It says the pro is it has clear visual signal, it is precise entry triggers, and effective with confluence. It is effective with confluence, meaning it is a confluential thing on its own. I mean, seeing a hammer pattern appearing right on a 9 or 21 or even across the two at once before it moves back is confluence of its own. But the thing is, it is not a standalone strategy. That's one. It is context dependent. So it has to fall in a specific context for it to be worth looking at in the first place. You can see hammer so many places, but it has to fall in a specific context and can be a retracement against trend. So you're not really advised to trade against the trend. So in a bearish market, you're seeing a bullish hammer appearing. You're seeing a hammer appearing with the 9 to 21. It's not so certain. So in this case, I think this is like second to the worst. So I think this will become number 7 and this will become number 6. So in other words, if I should sort this from smallest to largest, it means my most trustworthy strategy to start looking out for right now is the breakout and retest by Trader Nick. Wow, that is some sort of big win. And then the next best thing is trend line from Tory Trades. This is my own judgment. I'm not saying you should follow this. This is my own judgment. The next best thing also after that is supply and demand by Bond Skorupinski, followed by fair value gaps, and then QMR, QMC, Ichimoku, Hammer, and ICT. Oh, nope. Okay, yeah, ICT is the last thing I want to learn. Jesus Christ, that thing gave me a headache. All right, so what it simply means is going forward, I really have to go and start reading about retest and breakout strategy from Trader Nick, seeing how it really works. I saw a video the other day where he talked about how his strategy works, and I do like the video. I do understand a lot of the things he spoke about there. But one thing he said that is really, I'm finding it difficult to really be able to get is fundamental analysis. His strategy is heavily dependent on fundamental analysis, and creating that calculator to do fundamental analysis calculation is nerve-wracking. It's cracking my head, seriously. I actually have something to show you guys, and it's something I've been working on for a while. You all know I had the former calculator prior to today, coming from TradingView Forest Factory. But with all the analysis and research I had done, I was told that the website that has one of the most amount of news you can ever find is investing.com. So I pulled out investing.com's calendar, the entire calendar, not really the entire calendar. I just took for euro, British pound, US dollar, and I was also adding Australian dollar this morning. And I'm focused on looking at a large array of news, right? A large array of news. Currently, I only have British pound, euro, and the US dollar in view. So, but one thing I got to learn is the major things that really make an economy move or make a currency move is the central bank rates, the GDP of an economy, the inflation, which is the CPI, and the unemployment rate. The next significant things, right? Those two things alone, you have as many information as possible, is the retail sales, the manufacturing PMI, service PMI, and consumer confidence. Then the next thing you want to look at is just to add up to get like other fields in the environment or what is really going on, is the employment change, which is non-farm payrolls and the rest, the trade balance, the industrial production, and the PPI, which is producer price index. And also you can then incorporate a little bit of COT information, COT data, to see what the bigger traders, the real commercial traders, and also use the retail traders as contrary trading to find out what's happening. The other thing he has that I do not have is seasonality and trend of the market. So in my opinion, Trader Nick is still the boss when it comes to breakout and retest, because he has the software. I cannot afford the software, and Trader Nick, if you ever see this video, I really would love to have the software for free, or at least if I can pay over a long period of time. I would really love that. Well, I do not have the money to do that, and I really love the software. But the software already does all of this fundamental analysis and just gives you, okay, this is the situation right now, which is what I'm trying to recreate. But I'm not really like recreating his software. I'm trying to understand the real mechanics behind economy and how it works, and then create an algorithmic pattern to then determine for my own self, okay, This is how this economy is in terms of GDP, and you can see that right here. It's telling me everything is neutral, which I already know is wrong. And how did I know it was wrong? Well, thanks to the same AI, I gave it a little bit of job, right? A little bit of job. I told it to actually calculate the GDP strengths. So there it is. So I told it to look through the market and determine the current strength of each economy. And you can see it's saying that the euro is heavily bullish, strongly bullish. I mean, take a look at what I told it to do. I said, based on recent news release on economic calendar on investing.com, what is the normalized strength of each of the following currency? AUD, I forgot to add Japanese yen, CAD, Swiss franc, euro, British pound, New Zealand dollar, and the US dollar. Please write it out in percentages such that 0% is most bearish and 100% is most bullish. He did the entire research, started the research, completed the research, and said, okay, as of late May, June, I think I should have brought a beautiful outro for you guys to see. So let's run that quickly. Okay, so here we have a nice picture. So global currency clash, and you can see the best performing thing here is the euro, and then the New Zealand, British pound, Canadian, and all the way to the Swiss franc. Honestly, this is not so correct because the Swiss franc information is low. So how the strength is calculated? So it analyzes economic releases like CPI, GDP, interest rate, scores the data between -2 and +2, and normalizes them between 0 to 100% to define strength. So in the euro, which is a clear leader, it has a good GDP growth, and that is like its biggest strength. The next thing also is the New Zealand dollar, which actually has a higher GDP growth than euro, but in terms of CPI, in terms of unemployment, it had a 5.1%, which is also a good news. The British pound had rate cuts by -1. Unemployment data, bad. Not really bad, but it's just not good enough. The GDP growth is good, and also their CPI is good. The Australian dollar is just at 50%, right in the center. The US dollar subdued and slightly bearish, and then the Swiss franc, not so good. And then it tells us like the information that really matters, right? So the euro's GDP, the euro's CPI, compare that against the New Zealand GDP, the New Zealand unemployment rate, CPI, interest rate, then British pounds, same information, Canadian dollar, Australian dollar, and the US dollar. That is a lot. But what I want to say is, see this Forex game, we have come here, and all this journey is not for nothing. We're gonna make it, and we're pushing it hard. So I want to say thank you all for watching, and I'd like to see you guys make progress. I want to make progress too. I'll catch you all on another one, and I'd say do hit the like and subscribe button. Share this video if you think it's gonna hit someone differently, make somebody feel should I say emotionally inclined to want to try it out. But nevertheless, peace.